So the last Money Mindset Mastery series weren't uploaded because for some unknown reason to me, the OBS file completely corrupted. So here we are. I'm gonna try my best to recreate the last episode in the shortest form factor that I can while maintaining obviously the quality of the series. So without further ado, let's get cracking. So the way I've approached this is pretty simple. I've based it off according to the feedbacks, into the questions that I received in the group, and I realized that the best way is to categorize it into 3 categories and then create chapters as well. The first category is the first 4 chapters. So Road to Success, the fundamental or the psychological analysis. Chapter number 2, the lure of trading. Chapter number 3, taking responsibility. And chapter number 4, obviously the consistency of all of that and the state of mind. And then the second part would be chapter 5 to 8, which is the dynamics of perception, the market's perspective, the trader's edge, thinking in probabilities, and working with your beliefs. And then the last set of 3 chapters is the nature of belief, the impact of the belief on trading, and the thinking like a trader. And obviously I've categorized it in the chapters. So you have chapter 1 to 4, 5 to 6, 7 separately by itself because it works with the framework, and then chapter 8 to 10 again separately because of the mechanics in it and the protocol as the 11th. Now, to make this short but on point, I guess one of the best questions that I received was, how do I create the best setup and how do I know I have the best setup? Obviously for trading, when we're looking at trading in the zone and the experiences that we obviously have gained through all of this. And I think the best answer to that would be creating your own system. So when you're creating your own system, I would genuinely look at a couple of things you want to go through and create good confluences. So let's say, for the sake of the argument, let's say you like to use your Fibonacci's. Let's say you do channels. Let's say you look at volume. Let's say you look at pivots, and let's say you look at divergences. So we have 5 different things that I've named here. And the best way is to segregate them into obviously 5 different tools as they are and test them to make sure that you know how to use them individually. And then once you've done that, then combine them one by one to make sure that you understand confluences. But when you're trying to figure out confluences, the best way to figure out confluences is by creating categories. Just like I have here created the difference between chapter 1 to 4 and then 5 to 8 and 9 to 11 to present it, but then also created the groups. We should do the same thing with the tools that we're going to use in Confluence to reading the technical analysis, which means that depending on what we're reading, we're going to be using these sets of tools to make sure that we understand what we're going for. So if the market is bullish, we have a certain strategy. If the market is bearish, we have a completely different strategy. If the market is consolidating, we're doing nothing, at least in my case, best advice. And if it's choppy, I will still wait for the right moment. So either way, these are the things that are going to determine different strategies that we could be looking at. And from that point and from that perspective, now we have a set of strategies that we're going to know when and how to activate only once all of that was being back tested, right? Because the biggest mistake that people make is they wouldn't create a certain back testing of the tools they're using together in Confluence before they get to the system, right? And they could be using that system in the wrong setup of the market because we have to wait for the market to give us the right conditions in order for us to use our system and the tools that we have within that system. So also something that I forgot to record, so I'm adding this additionally. The biggest problem is fear. We are fearing something and we're always fearing something that we don't know. So if any kind of situation in your life is happening and fear kicks in, it's that's because we're scared. And we're usually scared when we are not aware of the outcome or what's happening, what the situation is. So the best way to get rid of fear is to go through all these situations over and over and over again to get rid of that fear, which means that whatever the setup is and whatever the setup is that we're using, that we're doing, we should go over it as much as we can so that we get familiarized with every single possibility that we could go through. So whatever the setup is, let's say it could be bullish, it could be bearish, the sentiment of the market, and you're practicing your longs or practicing your shorts. Well, you should be practicing the possibilities of your trades going wrong. And you should also be practicing the possibilities of your trades going correctly, or maybe going halfway correctly or halfway wrong. It doesn't really matter. But what matters is to dissect all the possibilities so that we can go through them and feel them and live through them, so that we eliminate a factor of fear by eliminating the factor of the unknown. Because if we're constantly going through the same thing over and over and same possibilities with the setup, we eliminate that unknown factor. Thus, we get rid of the fear, meaning that we know exactly what's going on with our trade. We know exactly what's going on with our technical analysis and our chart. And we're just speculating and waiting for the right moment to take the action because we know what can happen. We've played out all the scenarios. We've not only played it in our head, we played it on the chart. We've categorized everything. We've tested it. Voila, we're ready. We learn the tools individually. Once we've learned the tools individually, we test them together in categories and groups to make sure we understand the confluences. Once we have that down, now we narrow down at what market conditions are we using these tools. Once that is narrowed down, finally, we have created our system, and now we have to be testing our system. How are we going to test our system? I don't believe that people should, in the testing phase and in the learning phase, go out and spend their money and waste it. What I believe the best thing is to do is to figure out a prop company you would like to go for and write down all the rules and everything they're requiring from you. And once you have written everything down, you go to your paper trading, whether it's Blowfin or whatever demo account you would like to have there, and apply the same rules with the demo trading that you would get with a prop firm. That's it. And you keep testing your strategy until it works. Once it works, you're ready.